Hey guys, welcome back. So today we are going to learn what are the different types of traders. Now, here is my mind map and you will be learning the different types of traders and also you are going to learn to identify the type of trader you are or you want to become, right? So the first kind of trader is the scalpers. Now, who are scalpers? Now, scalpers are those people who trade for in the market just for few minutes. We can also say that they trade for few seconds also. Just get into trade, make a few bucks and get out. That's what the scalpers do. Now, let me write how much is the time frame they now they trade for 1 minute to 5 minutes. Now 5 minutes is like a long term for them. Okay, they don't do the typical intraday strategies. They don't use those strategies because they just watch the 1 minute chart and get out in just few candles. Now scalpers bring depth in the market. Now they don't have the power to move the stock on a very uptrend or on a downtrend. Okay, they don't have a lot of power, but you can see that the stock price flickering again and again and changing by just few cents or bucks. That happens due to scalpers. Okay, these are the very small people in a large quantity available in the market. Those people trade for 1 minute to 5 minutes. Now 15 minute trading for 15 minutes is like a long term or very long term for them, so they don't do that kind of things. Now the second one is the day trading. It is also known as intraday, right? Now the day trading lasts for a couple of minutes. Now it can last for 1 minute, minute to it can also last for 45 minutes. Now this is how decent money is made into the market by waiting for the perfect opportunity and grabbing it, right? Day traders they also kind of turn towards scalping because it is easy and they are into profit, so they book the profits immediately. But those people who have perfect strategy with them, they know what they are doing. They have indicators. They use tools. They wait into the stock and they make a decent profit in half an hour, 15 minutes, 10 minutes. So this is the day traders. Now we are going to get into what this percentage is written. Okay, first of all, let's cover what kind of traders are there. Now the third one is the swing traders. Now swing traders are the people who are like trading for 5 days or 3 days, 3 days to 7 days. Now sometimes it may last for 10 days, but maximum people trade for 3 days to 7 days. It is 1 week. Afterwards, it is the positional trade. The people who trade in positional, they wait for 3 weeks to somewhere around 3 months. Now you may be thinking, oh, 3 weeks to 3 months, that's a very long period of time. Now, yes, there are some people who don't have a lot of time, so they don't do swing trading, they don't do day trading, they don't do scalper. They just buy some positional trades and wait out for a few weeks, few months, and get a decent profit out of it. Because they don't want to actively participate into the market. They don't want to actively be in front of the screen for half an hour daily and they don't have time. They cannot commit the time required for day trading and swing trading and scalping, right? So they do positional trades. Now the fifth one is the short term. Now, short term trades are from 3 months and beyond. Now, those are the people who have already their company, they are running their businesses, they are making money through other sources, right? But they don't want to actively be in front of the screen. They don't have the right strategies or they don't have the proper risk management system to do the intraday trading or day trade because it is, see, when you want to do day trading you have to sit in front of the screen physically for half an hour or till the trade ends, right? Now you may be thinking that why don't they commit half an hour every day or a couple of days in a week and do the day trading. So the people who do the day trading, they have a very low capital, or they trade with a capital which is less. And the people who trade in a positional trades or swing trades or above that, in the higher time frame, they have a lot of money and they trade with a lot of big capital. Now, by trading into intraday, by doing some intraday things with a large amount of capital, gives you a tremendous amount of pressure. It puts a tremendous amount of pressure. Why? Because you are trading with $1 million and $2 million. You are risking all that thing into day trading, and you know that into day trading, if you're not quick enough to book your profits, the the 1 second it will show you 100 plus bucks, and the second movement it will be 1,000 minus. So that's how important it is to be very quick in day trading and scalping. So that's why those people don't do the day trading, the swing and the scalping. They just do the short term trade because they have a lot of money, right? And after that comes the medium term, which holds for or the trade for 4 months to 1 year, or maybe above that. And then after comes the long term. Now long terms are the hedge funds and the mutual funds, those big financial institutions who look for long term. Now for long term you need to do fundamental analysis. You don't need to use a technical analysis. Now you may use technical analysis to get into the trade, but long term trading is like holding the stocks for 2 years, minimum of 2 years, and it may now then last to 5 years, 10 years, 15, or maybe a 40, 50 years. Yeah. Now, what is the amount of profits or amount of percentage change the scalpers are looking in? Okay. So 0.25% or 0.5%, even if you those scalpers, if they get 0.25% or 0.5%, they are making a very decent good amount of money. So they just look for 0.25% to 0.5%. Now these are the targets, the amount of money. If if you're doing scalping, if you even get 0.25%, in a couple of minutes, you're making a very good decent amount of money. Why? Because they are using leverage. And afterwards it is the day trading. In day trading, traders are looking for 0.5% to 2%. Now on a very good day, if you are getting 2%, then it's a very good trade. Now most of the trade day traders are, what they are doing is, now they buy at the morning when the market opens, and they just keep it as it is till the end of the day and hope that it will turn into profit. Now that is not day trading, it is wishful trading. Okay. And see, why does those people do wishful trading? Is because they don't have proper strategies, they don't have specific entry and exit points, they don't know technical analysis. Now they know technical analysis, and they learn it from YouTube and other stuffs, and people don't teach all the things on YouTube, right? They don't teach all the things, they don't teach you the important nuggets, they don't teach you the golden rules or the entry point, the exit points and everything. So it is important to have proper trading strategies. Now the strategy which you are using to do scalping will not work for day trading. Why? Because the scalping is a very quick, very fast trading system. You have to use very fast trading system to you do scalping. For intraday, you can use a slow strategy than scalping because the time frame is big. But the strategy which you're using for day trading will not work for the swing trading, and the strategy you are, and it is vice versa, right? So the day trading people, they trade for 1 minute to 45 minutes. They use the multiple time frames to trade. And the swing trading, they just wait for 3 to 7 days and just get it out of that. Now in day trading, the profit, they look for 0.5% to 2%. Now 0.5%, if you're getting 0.5%, you are making a decent amount of good money. But if you're getting 2%, which happens very rarely, then you can make a hell lot of money, right? Now in swing trading they are looking for 2% to 5%. Now sometimes it may go above that this by. Now on an average I'm showing you that they make 2 to 5%. Now sometimes it may happen that you make 15% or 11% profits, right? But on another trade you just make half a percent or 2%, or you just it just hits your stop loss and you just get out of that trade in a no profit no loss manner, right? So on an average they make 2 to 5%. Now after that comes the positional trade, in which the people hold the stocks for 3 weeks to 3 months, and the target in which they are looking for is to 5% to 20%. Now 5% to 20% in 3 weeks to 3 months. Now it may go into 3 weeks also. The target may be achieved in 3 weeks, or it may be achieved in a few days if there is some news of if there is something good happening in the company. But we don't know how much time it is going to take to reach the targets. We just know the target, but we don't know what kind of how long it is going to take to reach the target. This is all about technical analysis, right? We don't know how much time it is going to require to hit the target, but we know that it is going to hit the target. Now after comes this short term, which in which the people use um, they trade for 3 months and above. If it comes under 3 months, then it is the positional trades. But if people are holding the same stock for more than 3 months, then they are doing the short term investing. And the medium term and the returns in which they are looking for short term is 10 to 30% in 3 months, which is a decent amount of money. And medium term it is 10 to 100%. Now in long term, and you get 50% to 100%. Now some stocks may go up. Now I know few stocks, actually there are many stocks which have given a lot more percentage, or like 2800% return in, what was that stock, Tata Alexi. So it is in 7 years, that too, right? So there are lot many of things, lot many of types of trades. Now you have to decide which kind of trade you are doing. Now let me help you out and show you how to identify the type of trader you are. Now if you are starting out, now how to identify what kind of trading you should be doing. Now there are a couple of factors which you can analyze yourself and execute, like what kind of trading I should be doing. Now the first one is the capital, the amount of capital that you have. Now if you have low capital, if you have less capital, then you cannot trade into. Now you can trade into swing trades or positional trades, but you have to wait for 3 months to a couple of weeks, and your capital will be stuck. So you're making 10% on the the amount of capital, which is very less. So you can go for intraday and scalping. Why? Because even if you have low capital, you can use the leverage to do intraday and scalping, and by doing that you can increase your capital in very short time span, right? But if you have high capital, then what you can do is you can put 90 to 95% of your capital in swing trades and positional trades, and you can use the remaining 5% of your capital in doing the intraday and scalping, right? So they see the most of the money is made in the long term investing. Most money is made in the long term investing. See, no one has become rich by doing the intraday and doing scalping, right? Everyone has, the most big investors have become rich by doing the long term investing. Now if you have low capital, then you cannot get onto that stage. But to increase your capital, you can start with intraday and scalping, and then if once you have a decent amount of good capital with you, then you can split it like 95% in swing and positional and 5% in intraday and scalping. Now the second aspect is the time, the amount of time that you have for trading. Now if you're working professional, if you're working in a job, then you don't have a lot of time, right? So you will come in this category which you have less time. Then if you have less time, then you can just do the swing trading and positional tradings. But if you have a lot of time, if you are a part-time worker or if you are a student, okay, then you can do the intraday, because in intraday you have to sit in front of the screen for 45 minutes to 1 hour, right? Now I give this advice to every people that even if you have a lot of time, don't sit in front of the screen from the moment the market begins till the end of the market, right? You even, yeah, now you can trade in the first few hours, which is if your market is starting at 9:15, then you can do the intraday and intraday and scalping in 1.5 hour till 11 o'clock. And after that, you can, if the market is closing at 3:30, then you can go again at the last 1 hour and 1.5 hour, and you will find decent amount of trade for intraday and scalping, because lots of volatility is in those two periods. In between period, there is no lot of volatility. Everyone is having fun. Everyone is discussing about that things, right? The most active periods of the stock market or in the financial markets are the last 2 hours of the ending of the market and the first 2 hours from start of the market, right? Now the third one is the temperament and the attitude or the risk. Now this plays a very important role in identifying the type of trading you should be doing. Now if you have a low temperament, if you become very angry, if you have short tempered mind, then you should not go into swing trade, you should not go into intraday trading and scalping, because if you incur a loss, then your temperament might do wrong things at that time. So you should stay away from intraday and scalping. Now if you have proper risk management system, if you have proper bar temperament, you have proper ability to change your thoughts the moment. See, intraday and scalping is all about fast trading, right? So if you're not able to take decisions quickly, you're not able to execute the trades on time, then there might be a big problem. So identify if you are short tempered or if you have a good temperament, then decide what kind of trades you want to do. Now the fourth one is the strategy. Now this is the most important thing. Now so a lot many of people learn strategies from the Facebook or from YouTube free videos, right? But those strategies don't work for the, now if you learn the strategy for intraday, then use that strategy only for the intraday. Don't use it for other kind of trading, right? Because every kind of trading has its significance, every kind of strategy has its significance and works well only when used in those scenarios. If the time frame changes, everything changes, right? If the indicators changes, the data the indicators are going to show you depends on the time frame you are choosing. So sometimes they may, now if you're using a lagging indicators, then you will not able to make good amount of money if you're doing intraday or scalping by using lagging indicators, right? Now EDX is a lagging indicator. It is a delayed indicator which shows you signal after the market has finished its candle, right? But in intraday or in scalping, you need indicators which are ahead of the market, which can tell you if the market will go down or up ahead in time, right? Now the last one is the risk reward ratio. Now I have made this a rule for every student who is learning in my course, that what should be the risk reward ratio. The good risk reward ratio is 1 is to 3. This is the minimum risk reward ratio. If you're not, now before getting into the trade, you should find out if your risk reward ratio is 1 is to 3. If it is less than 1 is to 3, don't get into that trade. Don't get into that trade. Now the it is 1 is to 3 or 1 is to above anything than 3. Now why 1 is to 3? Now let's take an example, okay? I see that my success ratio is 50%. Okay, if I'm running some advisory, or if I'm trading myself, okay, which I am. Now my accuracy is 50%. When I say my accuracy is 50%, which means that out of 10 tradings, 5 will be in loss and 5 will be in profit, right? Now when I have 5 in loss, now 50% accuracy, right? Now when I say 50% accuracy, 5 will be in loss and 5 will be in profit. Now what is the amount of money I am losing on every losing trade? Now the risk reward ratio is 1 is to 3, which means either I will lose $1 or I will be rewarded with the $3. Now when I lose 5 trades, which means that I have lost $5 now, right? Am I right? Yes. Yes. And the 5 are the winning trades. Now when I am winning the trades, which means that the reward is $3 per trade, which means 5 into 3, which is the 15, right? So the losing trades is $5, and the winning trades is how much? $15, right? Now, now you can clearly see that my accuracy is 50%. Now out of that, 5 will be in loss and 5 will be in profit, and I'm losing $5 in those 5 trades which I have lost, and I'm winning $15 as a reward on as on the 5 winning trades. Now if you calculate the amount of money that I made at the end of the day, it is $10, right? Even if I have 50% accuracy, I am making money in the market, right? So that's why I recommend all the people to use risk reward ratio of 1 is to 3 and above, and not below that. Now you have seen that people telling you about 90% accuracy, 99% accuracy, 95% accuracy. Those are all lies, because they don't know proper risk management. Actually they know the proper risk management system, but they don't follow it. The main thing is they don't follow it. They actually over leverage every time, and one losing trade is enough to take your capital or deplete your capital to halfway, right? So that's it in this video. I hope you are able to identify the type of trading you should be doing, and see you in the next lecture. Till that time, happy trading.